Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be an update on a trade entry, GBPCAD. This is a trade that I just entered and I'll be explaining in the reason behind this particular entry. I would consider this particular trade as a risky trade, but this was taken based on the position of the market. So without further ado, let's just quickly start. If I go to the weekly candlestick, you can see that the weekly has been a sell, I would say. This is the lower low and this is the lower high, and the market had a tremendous push upwards. It broke, if I zoom in, you can see that it broke the weekly EMA as well with a very strong candle, and it came to this week and it is still continuing the upward momentum. However, it has not broken the previous lower high, right? So if this is your lower low, this structure point will be your lower high. The moment this weekly candle breaks above and confirms a candle closure above this lower high, then this will be a buy trend, making this the new higher high and this the new higher low. Until that happens, the trend is still a sell. So I'm expecting a continuation of the sell pattern, or at least a push downwards before any change in direction. So why do I say it's risky? Is because the weekly trend may be sell, right? Maybe still sell. But if I go to the daily trend, right? The daily has been pushing upwards in a buy momentum, right? So the daily, this is your higher high and this is your higher low, right? It can make a new higher low before it makes a new higher high. So it can continue to trend upwards in the buy direction. And if I look at the 4-hour candlestick pattern as well, this is the higher high, and if I go all the way down, this is the higher low. This is the previous higher high, and this was the previous higher low. So you can see the pattern very clearly over here. It has been forming higher high, higher low, higher high, higher low, higher high, and I expect some sort of a higher low, and the EMA is also coming up here to act as a base before the next push for a higher high. So this is the overall picture right now. Now, why do I say this is a risky trade? It's because when I look at daily and 4-hour, they are in buy momentum and I'm trying to sell the market. And why did I decide to sell the market here? Well, to start off with, if I go back to the weekly candlestick, I see that if I zoom out, this area over here has been one of the highest point for a very long time, right? You can see no candles have ever printed out here, and I have to zoom all the way back to almost 2016, 2017 in order to actually find some sort of candle that is coming up above here. So this has been holding true for a very long time as the highest point. So I expect some sort of a rejection here naturally when it comes to the highest point. So that's one thing. Yes, it's going against the daily and the 4-hour, but if I zoom in all the way to the 30 minutes candlestick, I can clearly see a shift of structure here and an engulfing pattern over here. Now let me show that so that you can use the similar thought process in upcoming trades. So we can clearly see here, if I start from here, right, the 30 minutes candlestick, right, from here it made a new higher high, higher low. It made a new higher high, higher low, higher high, higher low, higher high, higher low, higher high. So all this while it has been in buy momentum until this particular point over here when it made the highest point. All right, this was the higher low, and this candle over here, this indicated a doji that usually acts as a reversal candle. If I zoom in to better understand, you can see here this long wick up here and a candle closure like this usually marks the top or an indecision, and if it follows through with a bearish engulfing candle like this, a strong reversal pattern like this, right, usually that marks the shift of structure and a trend reversal. So can the market continue to push upwards and continue the buy momentum? Yeah, it has to break through the highest weak point over here and continue printing candle closures above, then this is no longer valid, right? But as long as this is holding, this now turns from a buy into a sell, right? The shift of structure happened over here. So you can see again higher low, higher high, higher low, higher high, lower low. So this was the first lower low, this was the lower high, right? And then the candle continued to print over here. This becomes the new lower low, and if I follow through, this is the lower high. And then the market made another lower low, this became the lower high. The market did break this point. To be fair, the market did break this point and shifted the structure. However, it didn't close anything above this doji point over here. This was a very strong bullish momentum. However, I take this as a candle pattern failure because the next candle that printed engulfed this candle strongly, and also this candle as well. So this was an engulfing pattern. So this shifted back, this was the shift of structure, right? This did turn back as bullish for 30 minutes candle, but this engulfing candle invalidated this candle, and then this move over here confirmed the shift of structure already. So right now, to me, any sort of pullback is a good entry point. However, I decided to enter here itself. In fact, I actually set a sell limit here when this engulfing candle printed, and I said, you know what, I got my shift of structure over here. Yes, the 30 minutes candle did shift, but this candle was invalidated by this engulfing pattern. So I took the risk and I entered over here, setting the stop loss to be above the round psychological number of 1.87,000, above this doji candle, and also sufficient area over here if the market chooses to reverse on me, right? So far the trend has been doing good. This entire box over here, if I zoom out, this is actually a resistance area. Until this is broken, this will act as a resistance, and I'm expecting some sort of a push downwards. Now, the market, as we know, can do whatever it wants, but my plan is to hold and see what the market does over here when the market reaches this orange line, 2-hour EMA. And if the market continues to break forward, then it's a good idea to continue to hold. But if the market for any reason comes here, tests this area and bounce back, and you see a 30-minute shift of structure, then you may want to consider exceeding the position if it's necessary, because for the daily and 4-hour buy, you are selling, so technically it's like a counter trend trade. It is a pro trend if you consider the weekly, but the immediate candles that's happening in the next few hours will heavily rely on the 4-hour and the daily. And I've updated the journal. As you know, like every single trade has to be updated accordingly. So I entered about 4 p.m. my time over here, which was the New York session. GBPCAD was the pair. In sell direction, the confluence for my strategy was not so great over here, only 60%, because it was going against the daily and 4-hour buy trend. So because it's a sell trend, I got lower confluences. Therefore, I'm only risking 0.5% of the entire portfolio. So it's a very small trade to be consistent. And I've already marked the entry price, the stop loss, the take profits, and I've recorded or journaled the situation right now. When I took this trade, my emotion was calm as I was only risking 0.5% only. The trade reason, this is a high risk pro trend trade on the weekly, position taken based on where the market at, like almost the highest point. Decided to proceed as I observed clean 30-minute shift of structure and engulfing candle. Again, when the engulfing candle happened over here for the 30 minutes candlestick, to be fair, it actually, this was the lower low and this was the lower high, right? It broke the lower high, changing back the 30 minutes into a buy. But because this engulfing candle came back again, closing off this entire candle completely, I took this as a signal for entry. So when I entered, the 30 minutes is technically still a buy. And when this candle closed, only now the 30 minutes candle became a sell. So entering here was risky. Entering now should be a better option. But obviously the market, only when it breaks and continues further downwards, I'll be more confident with this trade. For me, this is still a high risk trade. So that's what I've been updating over here as well. I mentioned clearly, what can go wrong when looking at the daily and the 4-hour. It's not a sell, it's a buy, right? This trade to be considered high risk counter trend trade with only 60% confluence. This is my strategy confluences. So the 1 hour and the 2 hour EMA has to be broken, or it will act as support and reverse the market to hit SL. So that is what I clearly understand that can go wrong. The 1 hour EMA, which is over here, still holding. If I zoom in, you can see like the candle is clearly over here, and the 1 hour EMA, it tried to close, it did not, it is still working on it. This is risky until this is broken, and the 2 hour candle, the 2 hour EMA will come further down over here. By the time we will be in sufficient profit. This has to be broken. Only then I'll be confident that the trade is going to go to TP. If I go to the 4 hour EMA, the 4 hour EMA is still way below over here. So by that time, we would have been TP'd already, and we can close this trade if it's necessary. So that's about it. That is the trade update. And the most important thing over here is it's not that like you're gonna enter similar trades that I'm entering. That's not the idea. The idea is to understand the reason behind it so that we can implement similar entries in the future trades. All right, guys, thank you so much for your time, and good luck. Have a good day.